Hello, good morning. You're watching Buy Now Sell Now on ET Now with me, Vinny. And let's look at what the market is doing. Surely is managing to hold on to these gains. Again, 0.5% gain is what we're seeing coming in for the Nifty, comfortably above that 18,300 mark. Looking at the broader markets also, seems like they're performing better than the benchmark indices. The mid-cap space up 0.7% in trade. Small-cap space also gaining as much as 0.6 to 0.7% in trade. Gainer-wise, let's look at what are the top Nifty gainers that we have today. And we have Coal India that is buzzing in trade. Tata Motors is about that 500 mark for the first time again after Feb. Moving on, we'll have also Adani Enterprises, which is gaining in trade as well. Among the laggards, we have UPL that is down and out on trade. Sun Pharma not doing anything great. SBI too not holding on to gains. Let's look at what the FMCG pack is doing as well. Nifty FMCG is trading with gains of almost 0.2% in trade as of now. But yes, still managing, we saw a sharp rise coming in the FMCG, but post that it's given up some of the gains as well. Other than that, we do have, in terms of the auto space, that has been in focus as well. Keep an eye out on that one as well. Seeing a gain of almost 1% is Nifty Auto as of now as well. But I'm going to go back to that FMCG pack because FMCG companies have reported their numbers. And when you look at it, most of the companies have actually reported their numbers. So let's look at the volume growth trends that we're seeing coming in. And that is what we're discussing today on the PNSN lens of how the numbers were, what is the commentary is looking like, and how could one actually look at the FMCG space going forward from here on. So in terms of volume growth, like you can see coming in on your screens, most of them have managed to see that mid-single digit growth is what they were highlighting. That is what is coming, whether you look at Nestle, HUL, all of them, and Marico also 5% gains there, except for Dabur as well as Britannia, which has managed a volume growth of 2% is Britannia, and Dabur is a 1% volume growth. We're seeing good volume growth and decent volume growth is what is coming from the companies. Now, number-wise, we could say FMCG overall as a mixed bag because Nestle, Tata Consumers, Britannia, good set of numbers that came in from these companies. What was a bit of a miss was for Dabur, the numbers, as well as HUL was slightly below the estimates as well. Marico numbers were in line with estimates. Now, in terms of the commentary that came in, especially the focus on the rural growth, they were highlighting that most of the companies have actually said, whether you look at Tata Consumers, HUL, Marico and Dabur, all of them have highlighted that what has happened, rural growth, yes, there was weakness there, maybe slight bit of a subduedness in terms of the Q4 numbers as well. But now, at least there are signs of some green shoot coming in over there, signs of recovery coming in over there. And Nestle and Britannia actually highlighted that Britannia is saying that they've managed to gain market share in the rural market and continue to increase their rural market reach as well. Nestle too said that, they have rural growth has remained strong as well. Mainly it was more of a volume-led growth even there. So surely interesting commentary coming in there. Margins, maybe slowly will start recovering given that commodity prices are seeing a correction as well. But let's bring on board our guests for today. We have Rajesh Agarwal as well as Kunal Bothra joining in with us this morning. A very good morning, gentlemen, to both of you all. And FMCG, Kunal, first I'm going to come to you because when you look at the Nifty FMCG index itself, YTD also, it's been among the best performers over there, done much better than the Nifty 50 as well. Now, in terms of individually, what should we be looking at? Most of the numbers have already come out. How should one be looking at the FMCG pack? Is it still interesting? Would you still look at any stock specifically? I know ITC comes in on your favorite list, but that is also making continuously those new highs. So what would be interesting here in this pack?
Good morning, Vinny. Good morning, everyone. Good morning, Rajesh as well. So my sense is that, we are now into a zone of the markets where so-called defensives, the FMCG and the pharma, if I can club that sector as well, are moving into a different tangent altogether, irrespective of the traditional feature that the markets go into a zone where the defensives take a back seat. But this time around, you've seen many of the FMCG stocks making a new high for themselves, of course, led by the likes of Britannia, Nestle, etc. But the charts which I would want to indicate as a potential breakout would be on Hindustan Unilever. I think that stock is now on the verge of a very strong risk reward buy. Look at the last 8-9 months of chart patterns for Hindustan Unilever. The stock has tested the lower end of the bands multiple times. In the last 8 to 9 months, and whenever the stock comes closer to those kind of support points, you've seen very strong recovery for HUL. This backdrop of the chart and the current setup of the sector, where the FMCG index has given a breakout, indicates that HUL may not be lagging behind significantly. So the risk reward and the tilt should be at current levels. Yes, ITC has been one of the favorite. It would remain one of the favorite from the entire FMCG pack, but I think HUL would also be a good risk reward buy from current levels.
ITC remains on the list, but HUL also is coming in as a play for Kunal. Rajesh, good morning. And in terms of obviously the numbers, when you look at it, Nestle, a good set of numbers came in. When you look at HUL, slightly below, Tata Consumers, again, a good set of numbers. How are you viewing now in terms of these individual companies, numbers almost coming in as well? What is it fundamentally looking nice for these companies? Could we expect a strong move coming in going forward as well for these companies?
Good morning, Kunal. Good morning, everybody. You said it right. FMCG has been doing very well in the recent past because of various reasons. As Kunal pointed out, that when markets are in a bad mood, defensive starts playing out. But that's on the technical side. But if we look at fundamentals, I think there were various factors which contributed to the kind of numbers which we have witnessed in the recent quarter, the fourth quarter. First, it was the softening of commodity prices, no doubt on that. There were gains from distribution, cost management, healthy demand on the urban side, I would say. Rural demand was somewhat down, but there are expectations that with the strong focus of government and the strong rural push, I think rural, it's just a matter of time when rural demand starts picking up. There are expectations of margin improvements, hence we are seeing a rally in the stocks as far as stock picks are concerned. The first one, as always, from the last few years, it has been ITC, and still it continues to be our favorite. Despite the fact that it has run up quite a lot, I think there is a lot of steam left. Maybe in the short term, it won't move much. But if somebody has a 1 year time horizon, I think decent returns can be expected from ITC because of various reasons, the good distribution network, the strong balance sheet, the recent acquisition. And the next one would be Britannia, especially because despite the fact that rural demand for other companies were down, this company outperformed. And still with the kind of new launches and the focus of new distribution, I think we can expect good numbers in the near future. So these two stocks would be on our buy list.
Even on Rajesh's list, you have ITC as well as Britannia, and Kunal's list, HUL, as of now looks attractive risk-reward buy. My ITC always remains on the favorite list as well. On that note, viewers, we are going to slip into a very short break, but don't go anywhere. We'll be back with all your stock-related queries after this break. Back, and you're watching Buy Now Sell Now on ET Now. Let's start with all your stock related queries, and in the next 45 minutes we'll be taking all your queries. You can send us your queries on our WhatsApp number, Twitter page as well. Let me get started with the first query, and the first query is on BPCL shares. The viewer's name is Padma. They're holding BPCL shares at 410 rupees. Should they continue to hold this or shift to something like an SBI or an Infosys? Kunal?
I think we should hold on to BPCL. Now, of course, yes, SBI and Infosys are also good bets, but they are completely separate in terms of the chart patterns where the setup is. BPCL, IOC, HPCL, these stocks are seeing a good momentum for themselves, and my sense is that maybe sooner or later these stocks would eventually get to a breakout zone. So I'm not sure how your entire portfolio is allocated, whether you already have IT stocks as well as pharma, the banking names from your pack, from the entire pack. But then if you already have existing stocks of SBI and maybe say Infosys, etc., then I think holding on to BPCL could also be a good strategy. The stock is nearing a breakout, and I believe in the due course of the next 3 to 6 months, these stocks can see a potential 10 to 15% upside at least over that kind of a time frame.
Okay, so preparing for a breakout, that's an advice coming in for BPCL. But let's move on to the next query. The question is from Jay Krishnan, and Rajesh, she wants to know the prospects for Polycap as well as Bajaj Finserv, and wants to get into both of these counters for a fresh investments with a medium-term outlook. So at what price he should enter in both of these?
Very sound companies. Both have corrected quite a lot from their recent highs. I think one can buy at these levels also for a medium to longer term horizon. By medium to long term, I mean 9 to 12 months coming one by one. Polycap is doing very well. They have entered into Fmcg segment, that's fast moving electronic goods, and that division is doing very well. Going forward with the kind of traction we are witnessing in the real estate sector as such, and we have seen housing demand going up like anything. This sector is going to do well. The other one is Bajaj Finserv, which again is a holding company of Bajaj Finance. We have seen the numbers doing very well for Bajaj Finance. If something good happens in Bajaj Finance, that's going to be reflected in Bajaj Finserv. Secondly, they have holdings in two insurance ventures, that's General and Life. Apart from that, the housing finance division is doing well. And I am good. They even NPS are on a very comfortable level. They have recently got a EMC license. All in all, Bajaj Finserv is a very strong bet. One can expect a target of 1800 odd rupees in the next 1 year. So one can go long on this in a staggered way with a time horizon of 1 year.
Rajesh, I'm going to come to you again because Krishna Kumar is holding IRCTC 1,650 shares at 651 rupees. What is the future looking like for IRCTC? Is it a good one to continue to hold for the long term?
Of course, it's a good one. And even if somebody wants, one can add on to these levels because one, the company is doing well. All the four divisions, be it ticketing, rail, near, catering, or tourism, are doing very well. We have seen the kind of travel tourism going up like anything, room rates going through the roof. The entire railway pack has outperformed. Expect IRCTC. I think this is going to be a catch-up game in the near future. One can continue to hold, and one can add.
Rajesh, coming to you because this query is on the listing for today, that is Mankind Pharma IPO, and Akshay got into this particular subscription. He has been allotted these particular shares. So firstly, congratulations because you have already gained around 20% on the listing itself. Like on the screen, if you can see, the stock is inching higher with a gains of 29%. So Rajesh, at this point in time, what be the advice for Akshay? Should he continue to hold on or rather book some profits at this point in time?
See, it depends on what is his time horizon. If it's a long term for 1 year or 2 year, one can continue to hold. No doubt, it's got a good brand portfolio. The numbers have been well. The valuations at the time of IPO were a little bit stretched, no doubt on that. And it was a complete OFS, so no money has come to the company, so it won't affect any kind of operational performance of the company. But if it is just for flipping or a short term, I think one can book around 1400 odd levels and re-enter when it corrects after some time.
The next query is from Padma Siva Rao, and this is on Thirumalai Chemicals. They're holding 150 shares at 90 rupees per share. How much more upside can they expect from this one for the short term?
Well, the stock, which was almost at 50 rupees in 2020, went up to 350 and then corrected back towards 190, 195. So I think at current levels, Thirumalai Chemical is just about on the verge of a mild recovery for itself from that 195 mark. I think you should continue to hold on to the stock as of now. There could be a potential upside of at least another 15 to 20% if this trend sustains for the stock price, and which could take the stock maybe towards 240 to 50 levels. That could be a better zone if you're looking to book out profits.
Okay, moving on to the next question. And Kunal, this question is for you. Ghosh Dada has invested in Yes Bank, 2 lakh of shares at a price of 15 rupees. He has had a huge loss right now. So wants to know the outlook on this particular counter.
I think at 15 rupees, then the stock is at actually 16 rupees plus levels. So, but the only question is that are you expecting Yes Bank to be a stock which can go back to its prime of 300, 400 plus? I have serious doubts on the stock given the kind of float the stock already has, as well as the dilution sector the stock has done, and that is one of the reasons why I would not expect any major kind of upward trend for itself. I think the best range which you can expect, so in the best of the market trends in 2022, Yes Bank went to I think 23 or 24 levels. That is the stretched upside which I would probably expect for the stock if we happen to see that kind of a same market phase so over the next couple of months. But I don't expect any great returns for the stock. So you ideally have to switch towards few large cap names. Maybe an ICICI Bank, SBI, HDFC Bank could actually be better bets.
Okay. The next query, Rajesh, is on JK Cements, and we have Krish who's holding 125 shares at around 3,167 rupees. They want to know for the long term, would it be interesting to add more of JK Cements from the current levels and keep buying and adding more?
Despite the fact that the fundamentals are very strong, the company is into white cement, which is doing very well, and the kind of real estate boom which I discussed some time back is going to help this company. I think valuations are on the upper side. Maximum we can expect up to 3,200 in the next 1 quarter or so if the market supports. It's better to enter some beaten down cement place, maybe a Dalmia Bharat or a Birla Park would be a better bet in a mid cap space. Or in a larger cap names, one can look at UltraTech Cement, or to be on a safer side, Grasim would be a better bet.
Okay, moving on to the next question, Rajesh. This question is on OFSS. Purnima is holding shares from a price of 3,646 rupees. Concern about the fall today, but Purnima, that is on the back of the stock getting ex-dividend. That is why you are seeing the cut on the stock. The stock is OFSS. And Rajesh, she wants to know, is this a good time to buy more of this particular counter? What's the outlook on the same? And also give advice on KPIT. Would you suggest a fresh buy on KPIT Technologies?
One can have a look at KPIT Technologies. It has corrected quite a lot, and I think quite a numbers are pretty good. It can go up to maybe 950, 980 odd rupees in the recent, in the very short term, I would say. As far as OFS is concerned, I think it's better avoid at this point of time. All the good things have been already been discounted in the prices, and I don't think major upside in this, considering the fact that there is quite a lot of skepticism on the IT space as such. If somebody wants to put new money in a large cap stock, I think Infosys is better placed.
Okay, let's move on to the next one. And this query, Kunal, is on Tata Motors, and we have Tanush from Bangalore, who's holding 200 shares of Tata Motors at an average price of around 400 rupees. Today, it's obviously above the 500 mark. Is it a good time to book profits or still hold on to this one?
If you're a long-term investor, then definitely not. I would believe that the recent uptrend has just started off for Tata Motors after almost 1.5 years of consolidation. I am of the belief that the stock should scale up significantly higher from even current levels, provided you are a long-term investor and you are able to, or you are okay to ride, even the volatile and the tough phase like the stock had shown in the last 1 year or so. So I think if you are in for that kind of a time frame as well as risk appetite, you should continue to hold on.
Okay, moving on to the next question. Rajesh, this question is on two counters. Firstly is Hiromoto Co. The question is from Bisaka, and he's holding 10 shares of Hiromoto Co. from a price of 2,630 rupees, near about the current market price. And the other one is 200 shares of Paradeep Phosphates from a price of 42 rupees. Wants to know the outlook on both of these counters. Should he wait for some more time to, because in Paradeep Phosphates, he's sitting at a profit. So what's the outlook? Book profit at this point in time, or continue to hold on for expectation of some more gains?
See, Paradeep Phosphates, I would say book profit. Just to some other counters, maybe better names like Century Textile or IRCTC would be a better bet. As far as what was the other one you said?
A price of 2,600 rupees.
Hiromoto Co, right? The number pretty good. In fact, it was beyond expectation. The kind of numbers it reported, the numbers on the margins front especially. I think one can continue to hold. We have a target of 2,800 in the next 6 months.
Okay, Kunal, the next query is coming in from Akhil, and I'm going to combine both his queries that he had sent yesterday. We could not take your queries, Akhil. But first one is on HG Infra, PNC Infra. Would it be a right time to enter this one? And they're also looking to exit VRL Logistics and Britannia and enter something like an AIA Engineering. Would you be suggesting something like that?
Yeah, I think I'll stick to the first two parts, which is HG Infra and PNC Infra. I would not suggest a buy on HG Infra at current levels, even though stock has done exceptionally well over the medium term because of the way the stock is skewed in terms of the long-term averages, the 15, the 200 DMA. PNC Infra, on the other hand, the stock looks to be coming out of a consolidation at 300 plus levels, and that could probably indicate that maybe the stock this time around can come back towards 350 mark, which could lead to the first leg of a strong breakout. So I would suggest a buy on PNC Infra and maybe a wait and watch so far on HG Infra.
Okay, the next question, Rajesh, is from Subramaniam, and he's holding 1,000 shares of Indian Bank from year 2020 at a price of 99 rupees. Should he continue to hold on this particular counter, book profits? The results were announced yesterday, and we are seeing a muted set of reaction for today for this particular counter. So going ahead, what's the outlook?
See, as far as the reaction is concerned, we have seen in the recent past that even better numbers have seen quite negative reactions in the market just because of profit booking. A whole lot of accumulation was done prior to the results. Nothing wrong with the bank, but I think better bet would be switching to smaller names like Punjab Sind Bank or a Bank of Maharashtra. Especially Bank of Maharashtra, which has come out with a good set of numbers, not only in this quarter, but last 2-3 quarters, and PS are on a very lower level, I would say. Margins have improved. I think this stock can go to around 33, 34 odd rupees in the next 2 quarters. One can have a look at this.
Okay, on that note, viewers, we are going to slip into a very short break, but don't go anywhere. We'll be back with more of your stock-related queries after this break. Welcome back, and you're watching Buy Now, Sell Now on ET Now. Let's keep it going with all your stock-related queries. If you have not sent us your queries, you can send it to us on the number flashing on your screen on the WhatsApp. As well as, let's move on to the next one then. And IDBI Bank, Kunal, this is the query we have coming in from Anush. She has 25,000 shares at around 59 rupees per share. What is the view on this one for the short term? Should they look to sell it off anytime soon?
Well, I'm bullish on the PSU banking prospects for medium to long term. My sense is that the breakout which had started off for these PSU banking stocks in 2022 is here to sustain as well as grow multifold over the next couple of years. Now, specifically for IDBI Bank, I would not be sure because of the way the stock has been into the thick of news flow on the back of, I think, disinvestment, etc. I think that's the only concern with the stock price, because when you have too much of news flow towards a certain stock, that stock can actually underperform with respect to the entire sector. So I'm not too much specifically sure on IDBI Bank that whether they could be extremely positive over the near term, which could lead to an outperformance. It's better that you can make a switch from this stock to some other traditional PSU banking names, maybe something like PNB, Canara Bank, Bank of Baroda. They could actually be better bets. So you can start shifting out from IDBI Bank to these stocks gradually.
Okay, moving on to the next query. Kunal, this query is from Suresh, and he's holding shares of JK Tyres from a price of 152 rupees. We have seen all the tire stocks rolling, and he's also sitting at a profit. So at this point in time, what should be the advice, wholesale or average at this point in time?
So I would not suggest to average at current levels. 205, 210 could be a zone where you may start to book out profits on JK Tyres, because when the stock takes the first pause of resistance after such a steep rally, it's bound to be that resistance point could probably be a very significant turning or pivot zone for the stock over the near term. 205, 200, I think 8 to be precise, was the previous high for JK Tyres 2 days back or 3 days back, and that I believe could be a major resistance point for the near term. So book profits, but then I think closer to 205, maybe 208 could be a better range to exit the stock.
Rajesh, the next query is on Praj Industries. We have Chandrasekharan from Chennai, who is holding 350 shares of Praj Industries at an average price of 405 rupees. Could they continue to hold this for a period of a 1 year time period and maybe look to average out this as well?
See, averaging at this point of time wouldn't be advice. In fact, I would say book partial profit on your existing stock and wait for some correction. Because although the company is on a strong footing, the numbers have been good, but we should not forget that the crude prices are on a downtick from a considerable period of time. And with crude going down, I think the internal story will take a backstage for some period of time. I won't say it will not be working, but for a smaller period of time, maybe 320, 325 odd levels would be a very good entry point. At this point of time, partial profit will be advised.
Okay, moving on to the next query, and Rajesh, this question is from Rajendran, and he wants to know which any of your top recommendations from the hospitality or the EV sector that you like at this point in time with the next 3 to 6 months of investment time horizon.
See, 3 to 6 months is a very short period for EV, especially because it's a long story and will take some time to materialize out. And there are a lot of picks, and there's maybe a lot of auto companies, even auto ancillary. But if I have to choose one stock, I would go with Soma Comstar. That's doing very well. It's one of the one company which is in the top 10 in the entire world, and the more than 50% of order book is from EV space. And the best part is that not performed too well in the market for a very long period of time. So I think one can have a look at this. And then the hospitality, I would go with Indian Hotels. That's doing very well. The numbers have been good. They have good properties with the kind of average room rent going up and the inventory being short. I think despite the kind of stellar run which we have witnessed, the stock can move even further.
Queries again coming in on the banking side, and this one is on J&K Bank. The viewers holding 5,000 shares at 51 rupees, while Punjab Sind Bank 50 shares at 7,500 shares at 50 rupees. What is the mid to short-term outlook on this one?
So both for J&K Bank as well as Punjab Sind Bank, I would suggest a hold on both of these names. J&K Bank specifically, I remember I think last month or so the stock did exceptionally well, moving up from 50 levels to all 60 plus, where the stock made a high. 60-61 was the previous swing high for J&K Bank. So I think that could be a potential near-term target. But again, as I said, that my sense is that these PSU banking stocks could actually be good buys from a long-term play. If you have that capital risk appetite as well as a time frame, then I think you should go on for riding these stocks from a medium to long-term play.
Okay, Rajesh, the next query is from Sanjay from Telangana, and he wants to buy Tata Elxsi and UPL at current levels. So what's your advice on the fundamental take? And Kunal also wants a technical view on both of these counters. So Rajesh, firstly, let me come to you on this one.
See, both are good stocks for a longer term horizon. But as far as Tata Elxsi is concerned, I think some amount of correction would be there in the near term. Maybe 6,800, 6,700 would be a good level to enter for a longer term horizon. As far as UPL is concerned, with the government's focus on rural economy, elections coming very near and kind of vagaries of monsoon which we are witnessing, I think this company can do well. Maybe a target of 780 rupees in the next 6 months is quite possible. So both of stocks are in a buy list. But for Tata Elxsi, a little waiting for a correction would be a better strategy.
Kunal, what's your take on both of these counters?
So Tata Elxsi specifically, I would suggest to book out profits or exit the stock. My sense is that the stock is getting into a bit of an overbought territory on the short-term chart. So I think at 7,040-50 levels where it's trading, I think it's a good time to book out profits.
Kunal, he wants an outlook for a fresh buy in both of these
I would
counters.
not suggest a buy at current levels. So the idea with book profits is that this is the time where you don't initiate a buy. This is the time where you initiate book profits and wait out for a significant correction. Maybe at 6,200, 300 levels could be a better zone to buy Tata Elxsi, not at current levels.
Okay, let's move on then. And Aditya Birla Fashions, we have a couple of queries on this one. And Rajesh, I'm going to take this to you. So we have Rakesh also asked in terms of Aditya Birla Fashions. They're holding 1,000 shares at 186 rupees. Given that the news flow that we've seen coming in here, should they look to book profits, add more? What should they be doing?
Profit. I think the numbers are not that good to be excited and hold the stock in a longer term portfolio, despite the fact that they have good brands, they have changed their strategy, they have aggressively launched new brands. Recently, they have acquired new companies. But still, I think on the margins front, they are lagging behind. And I think this is quite a good time to book profit. Maybe enter at lower levels if it, by any chance it comes to maybe 170, 160 odd level. That would be a better place to enter. But at this point of time, it's a sell.
Okay, Rajesh, the next question is from Pradeep, and he's relatively new to the markets. It's been 6 months, but the investments he's planning to is for the next 2 to 3 years. And what's your advice whether at this point in time, Central Bank and Bank of Maharashtra, are these buy worthy at current levels?
See, recently, just now I have talked about Bank of Maharashtra. I think it's a very good bank with the kind of numbers which we have seen the last 2-3 quarters. It's going to do well. NPAs on a very lower level, margins have been good. I think one can go long on this. But since the investor is very new and looking for a longer term horizon, I would suggest first start with large cap names like Reliance, ITC, or HDFC Bank would be a better choice. Although they would give low returns when compared to mid caps, but then the risk is also low since you are a new investor. Go for a larger cap names.
Kunal, Firstly, this query is from Rao from Baroda, and he's thanking you for your previous advices on the stocks that he's asked on. Now, today's query is on Asian Paints. Kunal, he wants to know, he's holding 30 shares at 3,105 rupees. Can they look to buy more at the current price?
Well, I would suggest so. In fact, my belief is that the paint stocks have actually not performed at all in this last 1 month, 2 months of up move. Given the way crude has behaved in the last 6-8 months, where you've seen Brent crude prices falling almost on a consistent basis, from the 130-40 mark to now at sub 80 levels for itself, which means that the lower the crude oil prices falls, I mean the more the crude oil prices falls, the higher the probability is that these paint stocks would get into a very strong recovery. So I think the risk reward, the trend is in favor, and given the market setup as well, it seems that most of the paint stocks, Asian Paints, Berger Paints, Craftsman, etc., these stocks can do pretty well for themselves over the near to medium term. So since you've bought at slight higher levels, I would suggest that averaging out maybe at 3,000 levels could be a better strategy, but hold is what I would recommend for Asian Paints till the time you'll see the crude oil prices trading below the $80 per barrel, as well as still heading downwards.
Okay, Kunal, the next question is from Nandakumar and it's on UltraTech. He's holding 100 shares of UltraTech and currently at a profit of 23%. At this point in time, should he book profits or hold on?
See, UltraTech has been one of my favorites from the cement pack. We discussed this even yesterday as well. But somehow just on the short-term charts and especially after today's candlestick pattern, I get a sense that maybe 7,800 could be a zone where there is a short-term resistance which is creeping into the stock price. So purely based on that fact, I think it could be a good time to book out profits over there and then look to buy back again in case if the stock corrects and say comes back towards 7,500, 7,575 mark.
Rajesh, the next query we have, and this one is from Neeraj from Noida. They're holding SBI Cards. They have 1,000 shares at 786 rupees per share. Can they continue to hold this for the next 2 years?
Yes, of course, one can continue. We have seen card spends going up from the pre-COVID to the pre-COVID levels. It's one of the major card players, I would say, almost second or third in the category. And with the only listed player, I think there's scarcity of paper in this division. One can expect a target of 950 odd rupees in the next 1 year.
Expecting a target of rupees 915, the one next year on SBI Cards. That's the advice. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. Stay tuned. Welcome back to Buy Now, Sell Now, and let's continue taking all your stock-related queries. We are in the last leg of the show, so we'll try to accommodate as much as possible. And the next query, Rajesh, is coming from Arvind Reddy from Hyderabad, and he wants an outlook on Lemon Tree Hotels. He's holding 200 shares from a price of 74 rupees. So what's the outlook? Sitting at a profits, can he add more at this point in time, or should he just continue to hold on?
Rupees, one can even add to that. The company is doing very well. And as we spoke about hospitality sometimes back, we are very positive on the entire sector as such because of tourism going up. Lemon Tree is one of the major beneficiaries because of the room inventory being added every few quarters. I think the kind of expansion they are doing is very good for the company. The financials are also good. One can expect a target of 120, 125 rupees in the next 2 years. So one can continue to hold even added corrections.
Kunal, the next query is coming in from Denny from UK, and this one is on Cipla call option. They have 930 call option 930 at 23 rupees, 2 lots, which is a May expiry. What would be the target for this?
So I would recommend a hold. I'm not sure when you bought this option. I would probably expect that you must have bought it some time back because the current market price and the recent price for the call option was around 24-25 rupees only. I would suggest a hold on the stock as of now because the pharma stocks are seeing a leg up for themselves, as well as Cipla is also on the verge of breaking past about few resistances on the short-term charts, and that could probably catch the move on the upside for the stock price. So just on the basis of that, I would suggest a hold on Cipla.
Okay, Rajesh, Jay Krishnan is holding 91 shares of Tata Investments from a price of 2,700 rupees, sitting at a loss right now, wants to know the outlook. Should he sell at this point in time and rather make a switch to other counters? What's your advice?
One can continue to hold. These are holding companies holding a lot of investments from the group. I think they are trading at much below their intrinsic value. One can continue to hold. If there is no need of money at this point of time, no point selling to the stock. Maybe one can think of selling around 2,500, 2,600 odd levels, but one can continue to hold.
Next query is from HPL Power, and this one is from Mr. Mathi. They want to know if they can continue to hold this for a period of 6 months. They've bought 250 shares at 90 rupees per share.
Well, I would suggest to book out profits over here as of now, because the correction which had come for HPL Power in the last 3 days back was quite sharp and intense. From 113, the stock fell to almost 102. And the next subsequent 2 days, the stock had seen a very marginal recovery, not any major recovery. That could mean that the selling pressure would still continue for the stock. So it makes sense to book out profits over here and then look to buy back on dips. Maybe you can start at 97 levels, 96 levels for HPL Power. If the stock happens to come back to that territory, look to start buying back again.
Okay, Rajesh, the next question is specifically for you, coming from a viewer from Singapore, and he wants an outlook on Varun Beverages. He is currently holding 20 shares at a price of 1100 rupees. So wants to know the short to medium term outlook, and at this point in time, should he book his profits?
See, one can continue holding to Varun Beverages. It's doing very well in the FMCG space as such. We were discussing FMCG at the start of this show. One can even add the stock. Numbers have been very well. The company has announced a bonus. It's one of the major distributors of Pepsi, not only in India, but neighboring countries like Nepal and Sri Lanka also. They have gone for an expansion. Even the volumes from the non-carbonated drinks have been very high. I think one can continue this stock with a time horizon of maybe 1 year and a price target of 1800 come bonus.
Okay. Kunal, this next query is actually a Twitter viewer, Mayank, who's asking, they're holding 500 shares of Goodyear at 1,100. What should they be doing? Can they continue to hold this, and can they look to add more if they're looking to hold for a longer period?
Well, again, the stock is from the tire pack, and as I mentioned for JK Tires sometime back, that I would sense that these tire stocks are getting into a mild short-term overbought territory, and so will be the case with Goodyear as well. Yesterday's price action indicated that the stock faced resistance at the 1240, 1250 mark. Today also the stock made a high of 1235 and is now scaled down a bit, which means that this zone of 1230, 1250 could act as a hurdle for Goodyear over the short term. I would suggest that you book out profits if you bought at significantly lower levels, and then buy back again when the momentum dies down and when these stocks get into a consolidative phase. That could probably be maybe at a point of 1150, 1160 mark back again.
Okay, Kunal, I guess just yesterday we were discussing about the breakout on L&T Finance, and the next query is on the same from M. Mathivanan. He's holding 1700 shares of Discounter, but from a price of 150 rupees, a far-fetched price for him. So what's your advice? Do you believe that the stock can move upwards to 150 as well?
Well, I think it's a good strategy to book, to maybe accumulate or start buying or averaging at current levels. Bring your cost price maybe as close to 110, 115 if possible. So that will be once you tweak the volumes or the quantity of current purchase. I think that could be a better strategy for L&T Finance, because the stock is getting towards a breakout. 95, 97 has been a huge resistance for the stock in the last 5-6 months. There have been 3 or 4 attempts towards the stock price. So the moment the stock breaks past above this 97 mark on a weekly closing basis, I would expect the levels of 112, 115 to be met for the stock in the very near term. So I would suggest a buy on an average at current levels.
Okay, on that note, we'll get started with the rapid fire. And Rajesh, the first query coming your way. This query is from Basab Datta, and they're holding 300 shares of Deepak Nitrite at 2,230 rupees. Should they continue to hold this or exit this for the long term?
So it's an ad from a side for somebody having funds at its disposal. For this gentleman's a hold.
Rajesh, what's your view on Bank of India? Kain Swami has bought shares 4 years back at a price of 100 rupees. Should he wait or sell at levels?
Continue to hold, one can even add. The numbers were good.
Kunal, Garden Reach, should one look to buy in the for the near term? This query is from Indira.
Yeah, I would suggest a buy at current loans of 490.
Kunal, Ramu Raja bought shares of Voltas from a price of 865 rupees. What's the outlook for the next 1 to 2 months and what to do?
Hold, the stock may consolidate over here for some more time, but I would suggest to hold on to the stock as of now.
Rajesh, we have the viewer who is holding 30 shares of Metro Brands at 880 rupees. Should they look to hold this, continue to hold this, or maybe book profits and move to something like an infra name like a PNC Infra?
See, switching to PNC Infra would be a better choice at this point of time. Valuation looks right, although the company is good.
Okay, Kunal, Pradeep from Dubai wants to know the outlook at NHPC holding 4,000 shares from a price of 40 rupees. Once expecting a short move, what's your view on this?
I would suggest a hold. From a short term view, I would expect 47.5, 48 as a near term target for NHPC. But if you have a time frame of 6 to 8 months, then the upside could be significantly higher.
Kunal, Dr. Subbiya from Tamil Nadu is holding 400 shares of IDFC First Bank at 63.50 rupees. Should they continue to hold this for the short term?
Absolutely, yes.
Okay, Kunal, what's the outlook on Amara Raja Batteries? 500 shares at a price of 620 is what Suresh bought. Wants the short-term view on this one.
Short-term flag pattern being observed on Amaraja battery. The breakout is, or the target is closer to 640, 645. That could be a zone where you may look to book out profits.
Okay, viewers, that was the last query for today. Thank you so much, Kunal, as well as Rajesh, for joining in with us. And thank you so much, viewers, for tuning in to Buy Now, Sell Now on ET Now. On that note, it's a goodbye from Shrishti, myself, as well as the team who put this show together. But don't go anywhere. Markets at noon will take the action forward.